Hey everyone, last month I did a fundamental analysis of Tracxn Technology when it was trading at levels of about 111. Now recently company has posted its Q3 results and after that the share price is corrected about 10-12%. So I thought of quickly sharing my viewpoint. In case you missed the previous video, I would strongly recommend watching it first before you watch this video because that will give you a good idea about Tracxn business. Again, it is not a buy or sell call. I spent some time studying the latest con call and I just want to share my knowledge with you all. Make sure that you do your own research before investing your money. Alright, let's get started. So just to set the context, Traxcn is basically a data and software platform that provides information about private companies all over the world in a structured manner. This information is consumed by private equity firms, venture capital firms, investment banks for investment as well as mergers and acquisition opportunities. Just like we have Screener to study public companies for investment, Traxcn is for the private market. And the scope of Traxcn is not just limited to India. It provides private company data for all over the world where it is among the top 4-5 players globally. In spite of this, it's a micro-cap company with a market cap of just about 1000 crore. As I mentioned in my previous video also, currently private market investment is facing a tough time. In fact, the private sector funding is one of the lowest in last 6-7 years due to the ongoing slowdown in the global market and liquidity crunch because of the higher interest rate scenario. Having said this, the reason why I covered Traxcn last month is because it looks like the worst is getting over and private sector investment is showing some signs of recovery. In fact, in my last video, I clearly mentioned that this tough phase for private investment won't turn around overnight. It will take time, at least a few quarters. And during January and December month, Traxcn share price jumped quite a lot. So I said that any negative news or weaker quarterly number can result in correction in the share price in the near term. And you need to decide whether you want to bet on this company based on future growth potential or probably want to wait for quarter results in the next few quarters and then take a call about investment. Or third approach could be to take some position and track it and then decide to accumulate or reduce based on its upcoming performance. Now coming to the quarterly results, company's revenue from operations stood at 21 crore which is up 4.4% year on year. EBITDA stood at 1.9 crore which is up by 1.1 crore year on year. EBITDA margin, which is a key metric, stood at 8.8%. It has increased by 4.9% from Q3 of FY23. PAT stood at 2.2 crore and margins at 10.5%. So overall, it's a flattish performance in Q3, which is what I was expecting. Nothing great. And I don't really expect an outperformance in Q4 of FY24 as well. Having said this, I'm eyeing on their FY25 performance, especially in the H2 of FY25, where I expect the private investment market to improve and that should eventually result in better performance from Traxcn. In the past, Traxcn has grown at nearly 25 to 30% CAGR rate and its management in their latest interview has mentioned that they expect similar growth rate by end of 2024. So that is essentially by H2 of FY25. Now coming to Traxcn business, there are a few things I really like about the company. First of all, it has a solid leadership team led by Neha Singh and Abhishek Goyal. Both are IIT graduates. Neha is the chairperson and MD of the company. She has done her BTech and MTech from IIT Bombay and MBA from Leland Stanford Junior University. Abhishek Goyal has done BTech from IIT Kanpur and both have worked with top management consulting and investment firms in the past. In one of the interviews, they mentioned that while working in their job, they realized the pain point of accessing the data for private companies in structured manner and hence they started Traxcn. In addition to co-founder, Traxcn is a very solid top leadership with top education background and work experience. It has been backed by investors like Ratan Tata, Nandan Nilekani, Sachin Bansal, Benny Bansal, as well as top institution firms like Sequoia Capital, Excel, Prime Venture, that again speaks a lot about the company. Then second key aspect of Traxcn is its business model. It's a SaaS-based company that offers their platform on a subscription basis. Now this business model is very important to understand. In the past, Traxcn has invested in the capability building where it had an upfront cost in building the platform that mainly included employees' cost that consisted about 80 to 90% of its total cost. As a result, company was in loss. However, as the revenue started flowing in, operating leverage started kicking in because now the platform is ready. So the major chunk of incremental revenue is directly flowing into the EBITDA as the cost is not increasing in the same proportion. As a result, company's operating margin has significantly improved from -103% to -67%, then -60%, then -38%, and has become positive in FY23. In trailing 12 months, margins are at around 6%. Now going forward, once the private market would recover, its revenue would grow and margins can shoot up significantly due to operating leverage. And once that happens, its profitability would also jump significantly. Moreover, Traxcn is a completely debt-free company and already generating free cash flow. Then third key aspect of the company is its leadership in the Indian private market information space. Private market investment is a fast-growing space all over the world. Especially if you look at Indian and US market, there is immense growth potential. And I don't see any major competition for Traxcn in India. Although there are a few companies globally, Traxcn has one of the biggest advantage of low cost as compared to competitors. And this low cost has been the key factor behind exponential rise of Indian IT industry. So that can be a strong growth driver for Traxcn as well. Normally such tech-based companies in India are juiced out before they go public. But Traxcn managed to go public at such an early stage with a current market cap of just about 1,000 crore because of its profitable business model. And that has created an opportunity for retail investors to create wealth. Again, let me repeat, there are a few risks in the growth thesis, including longer than expected slowdown in private investment space and increasing competition. Still, it is worth considering if you have a long-term investment horizon. Again, no need to be in a hurry. There's ample time to consider adding it systematically, but only if you are convinced with its growth story. Let me repeat, please don't expect any firework in the next 1 to 2 quarters. In fact, any negative development in the near term can further impact the share price negatively. So if you can tame down your expectation and consider it for FY25 and beyond, Traxcn can be a good investment option. Now there are concerns around DI selling their stake in the company. So as per the latest shareholding, DI's stake has consistently reduced from 22.8% to 13.6%. In fact, even promoter stake is slightly reduced in last 3 quarters. So let me clarify that promoter stake is slightly reducing because of ESOPs. That has resulted in stake dilution. Promoters are not selling stake. As far as DIs are concerned, yes, they are selling stake, but at the first place, I don't expect DIs to invest in such microcap company. Normally, you don't find DIs investing in microcap companies. On top of this, considering the fact that Traxcn has a market cap of just about 1,000 crore, 8 to 9% stake reduction by DIs in last 3-4 quarters essentially means selling of stake worth 80-90 crore, which is peanuts for DIs considering the kind of AUM they command. They keep doing such transaction on daily basis. So I won't focus a lot on what DIs are doing as Traxcn is a microcap company. My focus is on its performance that I would track closely and accordingly take a call on buy, sell or hold. For now, I am keeping my faith in the company till FY25 and then based on the performance in FY25, I'll decide on the next line of action. Friends, one thing is very clear. Fundamentally, I don't see any problem with Traxcn. Slowdown in its performance is due to external reason and rightly so because of the ongoing slowdown. So once situation turn around, Traxcn should benefit from it. So this is it for this video. I hope you got a fair idea about the latest development in the company. I'll see you next video. Till then, take care.